Good morning, everyone, and welcome to the Piper Academy. Welcome to the Morning Market Report. Hopefully, you guys are doing fantastic. And today we have something special. So, all the way from all across the world, we have Piper actually giving a report today. So, I'm going to be reading this out at the end of the class. Those you also will see. I also sprinkled that little magic of mine in the thumbnail. Spoiler alert, they're not lying. But the data is not there. All right. So just getting that out of the way. Nonetheless, let's go over the Bitcoin chart. Also, let's go over a couple of news and let's into the actual investigation that Piper sent it to us. So it's going to be a lot of fun, a lot of investigation. And guys, this iceberg, it was long time seen. It was long time coming to us. All right, but let's get started first with you guys. You guys are the most important part of the show. So let me shout out to you guys. And of course, I got you right here. We got Steve Heike. What is up, brother? Welcome. We also have Ada Ace. What's up, bro? Welcome. My buddy, my gaming buddy. How's it going? We also have Mike Play in the house. Baba Jazz. What's up, my friend? Welcome. We also have JR, the one and only JR. By the way, if you are not following him, you absolutely should be doing it. Also, JR, let me know where or when I can forward the show. I believe you have an upcoming show, right? Right after the morning market report. Not 100% sure. Let me know so I can do the redirection stuff, right? Hit me up, and we'll set it up today. Who else we got in here? We also have Mike Pig, double shout out. Baba Jazz, double shout out. Who else we got? Look for Crypto, what is up? Donato Cabrera, how is it going, my friend? Great to have you here. So let's get it, and let's take a look at the news really quickly. Oh, Satoshi, here is. What's up, my friend? Welcome. All right, so let's jump into the news. All right, so getting started with Bitcoin, we already have the breakout. Remember, we were looking for the breakout retest. Something interesting that we were also talking about, it was the possibility to go and hit the stop, right? I'm going along the trend line. So far, we've been ranging. This is pretty freaking good. Why? Because we either fall or ranged, right? And we're making just enough, look at that momentum or space for the range to go from bearish to bullish. Remember, this is what part of what we were expecting, either a drop down to go find the support right here or a breakout right away on that area on the zero line. And we have absolute breakout right now. That is fantastic. Let me just sweep this up where it should be. There it is, almost exactly as we were expecting. Now the hard part comes. All right, this is today, right now. I would say this is the real test. Why? Because look at this huge dump that happened here. Perfect, right? But also we did just a quite bit of a lower low, but finally we are basically right here on this area right there. If we fail to break above our dynamic reactor, all right. So what I'm telling you is that we need to go at least somewhere around 91 to 100 or 92, all right? So going and hit the lower support band in here. And for that, if we get that, we have a chance for a breakout, retest, and continuation to the 104. Remember, I've been preaching so far, so long, that I am expecting a Christmas pump, all right? So come on, Santa Claus, do your magic right now and start pulling out some good prices out of Bitcoin, right? Again, I don't really care if it goes up and down. As long as this thing moves, I'm making money and I'm following up the Piper DCA plan. So just keep that in mind. Once you start getting your DCA in place, once you start, remember, doing the compound saving USDT or USDC, transferring to Bitcoin, and then Bitcoin going to compound savings too. So you are compound savings in both cases scenarios, right? And as long as you have that cycle, right, where you buy low, sell high, buy low, sell high, following the DCA Piper Academy, DCA strategy, well, I think you will be completely fine. The next, it will be trading, which is going to be adding an extra of value to your wallet. All right. So regardless, what is it goes up or down, It's fine. Just wanted to let you know that I have bought in here, right down in here, and I'm expecting, of course, that little bit of a push to go all the way. There you go to 96, 96, 100 at least, and then going up. What if it goes down? Perfect. This is going to my pile, and then I'll see you back in 1 year or so, right? To sell it back at whatever price it is. Higher, of course, higher, higher, higher. So, what is it going to happen if we break? Which right now we're trying to, right? And I think we will. We're going to be going to dynamic reactor. We need to look at dynamic reactor and look for rejection. If we don't reject, that's where we have the bell, the ding, ding, ding bell, that we are having a good error right here. We need to be very, very, very careful. Rate hikes, guys. I mean, we have Japan pushing rates, and we're gonna be looking at it right now in a minute, and it lags. All right, it does lag for a little bit, so be prepared, even for a very disappointing Christmas pump. All right, so maybe, I mean, I'm looking at 100K, 105 for the best case scenario Christmas pump, and I'm looking at somewhere around here. And of course, you already have my alert, 96K disappointing Christmas run up, right? We need to be realistic at this point. I don't think there is that much that can save us all, unless we have a white swan, just the opposite of a black swan, right? Something really, really important happening in the macro space that really pumps the price action of Bitcoin. And talking about that, let's go take a look at the news. And also at the end, we're going to be taking a look at Piper's investigation. Breaking US stocks extend again with the NASDAQ. And we talked about the NASDAQ, right? Now up a 1% today. It's not too late for Santa Rally. I'm telling you, everybody's looking for that Santa Rally, all right? Even I am looking for the Santa Rally, but I'm also here to tell you, all right, prepared, all right? No kids around. Santa was your parents. All right. The point is that, come on, with all of the macro stuff happening around and with everybody speculating, I believe that we're gonna have, of course, people buying because they're looking for that Santa rally, and then the macroeconomy just not following, right? I mean, not everybody pushing there, and of course, a very disappointing area where nobody else is buying, and then the price start reversing. So a little pump, and then a bigger dump. But still, nonetheless, Dow Jones seems like a 0.5 up, a 0.7 for the S&P 500, Nasdaq 0.99 or 1%, and small caps around plus a 0.71% up today. Again, something important breaking: Nike stock and KE is now down a 10%, negative 10. Wow, that is pretty wild. And tracks for its largest daily decline since April 2025 as China sells plumbing. Ooh, we'll see how that goes. But so far, hopefully you are not in Nike at this point. Let's take a look at the liquidity or liquidations for today. Everything looks red, of course, and we have 24-hour reg, somewhere around 494 million. Stay within the same range, right? I do recall, what was it, Monday or Tuesday, that we were looking at this the liquidations. We are kind of like in the same ballpark, isn't it? I think yesterday just was the lowest 24-hour rec. We were somewhere around the 300 million, somewhere around there. We are within the same range, right? So be careful. That was telling us buy low, sell high, right? Within the current range. And well, the past 24 hours, 1,480, 1,381, 30 and 311. Come on, trades. The thing is that I'm looking at numbers and my brain goes Spanish, English, Spanish, English, Spanish, English. So that's why it kind of like I messes things up in here. Trades were liquidated. The total liquidations comes in at 499.40 millions. The largest single liquidation order happened on Hyperliquid. Oof, again, yesterday was also the same one here. BTC USDT valued at 6.9 million. So not that big of a deal. I mean, we also throughout the week saw a little bit of a higher liquidation and also a little bit of a lower. Again, within the range. I need to Hold on 1 second. My doggy is here trying to pull out the cords. Give me 1 second. Okay, found it. There it was. Let's go here. Let's take a look at how's the max pain doing. Well, we see the max pain on longs is kind of like shorting here or going lower as per yesterday. Prices are not changing that much, right? So short distance is 0.44, and per long max pain, long distance, that is the one rising, but not that much, 5%, 5.34%. Not much of a difference throughout the week. Although we're seeing some depegging out of here because we see people really trying to allocate back and forth, back and forth, back and forth, and we can see that in here, right? Remember, this was the very first, I think, was this Monday? That was the 17th. That was 2 days ago. The 17th was Wednesday. Well, this was this Monday? Well, somewhere around this area we start ranging. If you take a look at here, look at where we clear liquidity, right? Back at liquidity, back at the same almost exact point of liquidity swipe, right? Back down to the same liquidity swipe, back up almost to the same liquidity zone up here, and now a little bit lower. This is the breaking point, right? This is telling us, hey, you know what? Despite we're in a range, there is a little thing, something broken in here, right? Something is going lower. And right now, I want you to pay attention. Where is the bright spot? Again, they want to get somewhere around this area of liquidity, a little bit higher. Let's see if we can make it somewhere around 90,650, or if we're going to be creating a lower low at 84. But so far, so good. We are on a resistance based on the previous yesterday's topping here. And well, it would make sense for it to rally just a little bit up and then plumb back down to 84. But also at this area, we do have this little spike of liquidity being built up. So be careful. We might just get it, right? And then spike down, something like that. A really quick wicking action, right, to the upside to just clear out that liquidity and then coming lower. All right, so let's go take a look at a couple of more other things. This is pretty centered. Let me just refresh to get the latest data. And you can see right here, this is, you see how it was? Like, it was very, very, very centered. The grouping here, and actually I kind of like this because it looks like a shooting group, right? But the grouping was a little bit lower within the axis, and now it's rising up a little bit, which means most likely that things are going up. And of course, like we see this last 4 candles going up, right? But what also does it mean, or how do I use this? I use this as a counter indicator, remember, on the 15 minutes. So every 15 minutes, I should be kind of like refreshing this, all right? If you don't want to refresh it that much, you can go to the 1 hour or to the 4 hour. It will give you, there you go, a little bit more spread out throughout the y-axis zone, all right? But so far, so good. Let's go to the 15 minutes because that's the way that I like to see it here. And you see how it's spreading out, but tilted to the upside. The grouping is tilted to the upside, which means short closings. They're getting wrecked. Everybody that was getting short either moved their stop to enter and they're getting stopped, right? Or they're actually getting stopped out or liquidated. And also we see people, of course, longing those stops, right? So long entries. So this is telling me that I should be preparing for a little short. Once again, how do I use this to actually make profit? Hey, Kelly fan in the house. How's it going? Satoshi, double shout out. Steve Hecky, triple shout out. How's it going, guys? Welcome. Good morning. So how do I use this? All right, so this is telling me, all right, most likely we're going to go a little bit higher. Why? Because we have opening longs right now. Opening longs right now. All right, so there people are buying. All right, but also we have an equilibrium right here on short entries. So, which means I should be expecting a retracement, not immediately, right? But at the next resistance. And guess what we're fighting over, right? The next freaking resistance. And look at it, we already are seeing that retracement that we were talking about. That's why I like to watch or look at the 15 minutes, because that gives me immediate within 4 hour candle reaction, right? So right here, I could be looking at, hey, what is the sentiment around this and the next candle will be like, right? So I am expecting, or I was expecting to go a little bit higher, have a retracement, and then look back again on the 15 minutes positioning here. All right, so the crypto derivative visuals screener. So that's how I use it. Once again, it's a pretty good tool. Let's go take a look at what the polling market is telling us. Will Trump release Epstein files? Remember, that was between the 19th and the 20th. Today's 19. That is a 90% versus a 93% chance. Come on, we'll see how that goes. Hopefully, he does it today. It will be such. I don't think so. I mean, by Saturday, 20. I actually think that he's gonna push it somewhere around Monday. I don't know if he has to like mandatorily release it between these 2 days, but it would make sense for him to be able to clear anything surrounding the Epstein files that he might, right? And since the government doesn't really work throughout weekends, well, I would say that it makes a little bit more sense for it to go throughout starting on Monday. Also, it's not that like he doesn't stick out or goes away to Truth Social, right? Or Twitter. So, or Twitter 2.0. Fed decision in January, 50 basis point, 2%. So basically, no really low chances in here. And 25 basis point decrease, a 21%. We'll see that. Who will Trump nominate? We already kind of like go a really big chunk ahead in here on 55. And well, what is the Venezuela thing? Here is Maduro out by still. Well, look at that. Big change in here on January 31st. Of course, a 17%. TikTok sells announced by. Ooh, really? Really? We'll see how that goes. December 31st versus March. In Elon Musk tweets December 12th, December 19th. Come on, you gotta be kidding me with how much he's gonna be tweeting, or like when is he gonna be tweeting? We'll see. This is an interesting one. All right, let's go and take a look at and dive into the Piper investigation. He had prepared something special for us, and let's go dive within it. All right, so we have right here table A, percentage change in CPI for all urban consumer CPI US city ranges. Something important that he's marking out. Look at this big blocking here. This is October and November data. And what do we have there? Right? Do you have any numbers? No, not even a zero here. All right. So that is missing data. I actually was talking about this yesterday, if you guys recall, where I was mentioning, hey, you know what? We are right now having a very good decrease, right? On what I said on this last outcome, right? Fed decisions, and what happened with previous other ones, right? I mean, and I actually mentioned I don't want to suggest that they're manipulating stuff, but the government might not be pushing something. I mean, they have a night gap in there where maybe governmental institutions can't, I don't know, maybe make mistakes on the data that they could be presenting up ahead, or give a gap to then present way better data for the Fed to be taking a reaction. And remember that point I actually mentioned, the Fed needs something to happen, right? And here's what I might be open to debate, right? Because under my eyes, right, and this is my opinion, under my eyes, the Fed had the data, but the data that they have, it's holes with holes on it, right? Let's actually read what Piper told us about this. Hey, we have Ari Piper in the house. What is up, Piper? Thank you so much for this little gift on today. That was a fantastic investigation. Really, really, really appreciate it. Let's go. It's done on the 27th. Let's get it. All right, so here's what he said. Image one. This is a CPA data gap, right? That's what he's mentioning. First, look at this. October and November CPA data is missing, right? So let me look at that. We just have like two here, and then what was that? Gasoline, yeah, and maybe diesel, new vehicles, and used cars. All right, but what about electricity, right? What about the food and home, right? I mean, important data is just not there, man. They say that we're becoming Venezuela. You guys are becoming Mexico. No kidding. All right. Jokes aside, the Fed is making decisions without confirmed inflation readings. Markets are pricing rate cuts based on assumption, and this is very, very important because yesterday I was saying that the Fed needs the data. They have the latest data, but they don't have, I mean, the missing holes in here. So that is actually much more precise because they are assuming or they're using data and use predictively mathematics, although it doesn't really make that much sense because we don't see the data, right? It went from pretty high to pretty low, and what happened in between, right? So missing the CPI does not mean inflation is falling. Truth. It means policy is operating with a blind spot. Absolutely. I mean, that's the holes in the chart, right? So, all right, we have this whole hole, and then a prediction. Come on, right? It's not like, I mean, but the prediction went to the other way that we were expecting, if that makes sense. Let's go now take a look at here. This is the global equities versus the Japan interest rate. Spoiler alert, this is where things start getting a little scary and also very important. So pay attention. If you were sleeping throughout the class, this is your wake up call. All right. Now this is the Japan. Japan just rose or raised rates at 0.75% right here, right? The highest in decades. This matters. I mean, let me repeat that. The highest in decades. All right. This really, really, really matters, right? And those really just come from my mouth, not from the text. So this really matters because Japan founds the global carriage rate, right? So what does that mean? When Japan tightens, cheap yen disappear, no more carry trade, and remember what happened last time, right? That forces global delivering, and when that forces global deleveraging. And when leverage unwinds, markets don't drift, they dump. So that is very important. And I mean, let's take a quick look here. This is the next picture. We're not supposed to go over here, but this is such a good data. This is Bitcoin, all right? And we see the result. I mean, we know Bitcoin is very volatile, right? It reacts first, and then the marks kind of like Bitcoin duplicates whatever the, for example, S&P 500 does, right? So now, and what is it? And when global leverage come out, Bitcoin doesn't hide. There it is. It reacts first. Exactly what we're talking about, right? Bitcoin's still like the little brother in the big picture of the macroeconomy. Remember, I always repeat the same thing, which is we are just getting up there with the big boys, right? Playing with the big boys on stocks. And we're just about the size of Meta, and that also has to be proven with the upcoming bear market. We'll see how much volume or how much market cap we lose, and let's see if we still even closer with those guys. So I will say that I'm still hoping for that shallow bear market. Hopefully we get that. That will imply that we might have an elongated cycle. And if that is the case, I know this is not the narrative right now, but if that is the case, most likely we could have up ahead, if that was the case, right? A prolonged elongated cycle, which could be leading to 300K, 400K, or even 500K. But this is way too early to talk about that. Just pinning things out as we go. All right. So well, when the force global developing, what is it? The markets become when this matters because Japan funds the global carry trade. When Japan tightens, cheap yen disappears. This forces global deleveraging. When leverage unwinds, market don't drift, they dump. Now, and when global leverage come out, Bitcoin doesn't hide; it reacts first. So we can see right here when Japan has some rate hikes, right? A 24% drop, a 30% drop right here, a rate hike here, a minus 29%. And what would it be? Not only that, look at this. We already have this drop down in here. I would say not never, but haven't seen this before, because when the carry trade happened, we had the momentum up pushing. So in a way, I mean, the momentum of Bitcoin was counteracting the carry trade, right? But right now, I mean, what momentum of Bitcoin? Momentum is not to the upside. The momentum of Bitcoin is to the downside, right? We're not even ranging like we were in here. We were not even ranging like we're in here. On the weekly, or in the in the weekly, we can see that we're coming down, and we're kind of like actually making an indecision candle, two indecision candle right there. And now we have the rate hikes of Japan. Oh Lord, let's see how that unwinds. Liquidity canary. Let's take a look at here. This part here's Bitcoin during previous Japan rate hikes. Every hike cycle led to a sharp drawdown. Minus 24, minus 30, minus 29, and we'll see how that unwinds. This is not random. Bitcoin is pure liquidity beta. And I would actually say it alpha. Absolutely. Titan's liquidity, Bitcoin moves first. This is stress, not a cycle top. So yeah, absolutely. Image 4. Let's go and jump to the image 4 here. This is pretty important. This is the S&P 500. Margin depth 7 months percentage change. Not only that, take a look at this cycle: 1960, 17, 80, 19, 2000, 2020, and 2020. Look at that. This is separated in 10-year cycles. All right. This is pretty important. Let's take a look at here. Now look at the margin depth. This is the margin depth. Perfect. 7-month percent change, although we have in 10-year separation areas in here. Every time margin depth surged like this historically, forward markets returned negative within 6 to 12 months. This is pretty good. I mean, so what happening here? Well, look at how it surged and then come back down, right? We range for a while, down range for a while, and then back up, peak out, right in here. When we get to the margin depth 7%, somewhere around right in here, and then we come back around here, right? So what's happening here? We might be able to punch through. Remember something about the carry trade, it lags a little bit. And also, well, we just have seen what we talked about the S&P 500, right? That we are stalling a little bit in here. Not only that, remember that we actually went ahead and analyzed this point on the S&P 500 yesterday, right? We talked about that next lower high and the lower low, and well, that tends to be a premonition for a correction on the S&P 500, right? So everything's kind of like gluing together. This tells you risk is being fueled by leverage. Absolutely, because you're putting money that you might not be able to afford, and it's money from a most likely digital era, which means it might not be backed up, which creates a unbalanced, and you know what the drill is. And leverage is now getting more expensive. Yes. And why is it getting more expensive? We just have rate cuts on the Fed, because we're talking about the Japan carry trade, right? And now remember, let's go back to it. Remember that they get cheaper yen, right? With higher rates, and then they just go back and forth with foreign money to get cheaper yen. Right now, they don't. And what happened with the other thing? They are forced to sell their yen to pay back the debt, and they did not got enough money that they needed. Therefore, we start seeing once again the unwinding of the snowball effect, right? Leverage is now getting more expensive. Finally, so pull it all together. CPA data is missing. Who would have guessed? Right? Government shutdown. I mean, this even feels like planned, right? So CPI data is missing. Japan is tightening. Here you go. Japan is tightening to 0.75%, and global liquidity is shrinking. Right, Bitcoin reacts first. Equities lag with record leverage on the books. This isn't about narrative; it's about liquidity leveraging the system. When leverage come out, price follows. So that is what Piper has sent it to us. Thanks so much, Piper. That is a fantastic, phenomenal analysis. This is starting thing. This is starting everything that we've been talking about. And guys, you can go back a month ago, and we start kind of seeing these signals back from there. Wow, we just keep a tap on or keep the finger on the data, and the data was missing. And then we have just an amazing, fantastic, magical, great data out of nowhere. Well, we know something is broken, right? I mean, it just things doesn't play it out like that. It's not quantum mechanics in here, right? That we're talking about. It's just finances, simple financials. So the markets are mixed out in on borrowed money. Maxed out on borrowed money, yes, and I've also been saying it like, hey, you know what? We have the two realities. Do you guys recall that? Right? We have the our monetary reality, what we face day on day. Like for example, hey, how much money do I earn? How much can I spend on that? And can I make a living on it? Yes, no. And then your savings, how does your savings looks like? Hopefully they look fantastic. Hopefully they looks like you have a phone number in there. But most likely we can actually see from the charts that people are not able to save at least as much as they could. If you are one of the few that are being able to save, guys, don't take that for granted. It is a fantastic, phenomenal thing that you're able to save. Not only that, put that money to work. Try to go as low risk as possible, but just don't put those green bills under the couch. They're losing value, right? Other couple things that we've been talking about here. Remember, now that we're pretty bearish, right? That we see the bearish scenarios here. Something really, really, really important. It is when is the best time to invest. The best time to invest is right after the next worst day in the market, right? So, guys, you don't need to catch the bottom. You just need to see it collapse. And when the chaos is already happening, that's when you start migrating your green bills into assets. So you get assets for cheaper and so on and so forth, right? Remember, let me actually bring this up because this is, I would say this is pretty important. Let me see if I can just pull this out of the way. Right. And yesterday, if I'm not mistaken, yesterday or the day before, let me search for that. We talked about how rich people are investing their money. And I think that was pretty important. Let me see if I can actually put this up here. That was yesterday's class. Let's go over this. And let me see if I have it here. Oh, it was the day before. Let me go for that. This was, will it dump? Here it is. Guys, you remember this? This was pretty important, right? So going back to it, so what would you be doing? What you should be doing, right? I would say toward changing your mentality towards this one circle in red or boxed in red, right? I mean, look at how those guys, right? Everybody that is above 1 billion, and you don't need that 1 billion, you just need to start transitioning, right? And look at how that transition happens or that break happened at $1 million, going and making in growth. I mean, something they need to be doing good for them to go between 1 million to a 10 million, and from a 10 million to a 100 million. I think they actually, this is pretty important data, and this reveals what mentality and what actions do actually make it change, right? So how you are looking at your assets really make it change. And remember, you don't need, I mean, if you see right here, for example, and this is a fantastic example. Where is it? Let's say real estate. All right, real estate. Look at real estate. This increased real estate, increased real estate. No, real estate was not that one. Here is, yeah, increase real estate, decreases real estate, decreases real estate by percentage. That doesn't mean that they sell. It just means that they're allocating more time and resources to other stuff. What is that other stuff? Look at the bigger change. I said the biggest change is between 100 million and 1 billion, basically increasing their business interest. Not only that, a rising up, look at this bottom area right here, into stocks, right? So I would say that this is where, like going and rising your business interest. How could you do that while also keeping or trying to do investments? I think stocks, it is one of those things that, hey, as you get a big cycle going through, you will be able to pick and choose those stocks that will survive and stay for a long time. And maybe go and invest on some indexes, right? Something, I don't know, that it is for the long run. Remember, do not put all of your eggs on the same basket, right? Remember, diversification, it is the new rule number one. So I think that's pretty much what we got for today. Let's go take a look at a couple of altcoins before we wrap things up. And let me read it here. The market, Piper says, the markets are mixed out and borrowed money, maxed out on borrowed money. Babaya says, so global liquidity is going down. Thank you. What are you people saying? It's going up, and confused about what is happening to the Bitcoin price. Don't be confused about here. All right, this is what's going on. It's not that right now it's going down. The trend right now is going up. But let's go and take a look at the chart. I think this will clear things up. All right. Let's go and take a look at the S&P 500 XPX. Right. So, what does that looks to you? Okay. But also look at what happening here. What are we having here? Let me do a replay. I mean, if I ask you how does that looks to you, well, you could be telling me, hey, this is parabolic, this is going up, right? But if we do the replay here, for example, and we go somewhere around here, right? I don't know what this happened. Yeah, leave. What? Yeah, start new, whatever. What the hell is that? All right. So what would that happen, or how would that look like to you? Again, I mean, that looked like, right, going up. But then we're starting to have some alarming data. What kind of data is there? Well, we have the Japan carry trade. We see everything maxing out on leverage. So what happened when people start over leveraging, right? What happens when we when we have missing data? What happens when narrative is not numbering with numbers, right? Well, we start seeing some fractures in the system. That doesn't mean that everything is going horribly wrong, but it means that we have the chance to look and foresee a possible, and here's where we start getting a little bit more worried, right? A possible breakdown on the system, right there, breaking the trend line, and now break a retest. Now we know we're onto something, especially because we just lost the previous low, right? And then you see how it unwinds, right? Going lower, 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 and that's where we are at this moment. So Baba just mentioned once again, so global liquidity is going down. No, global liquidity is way leveraged. What are people saying that is going up and confused? Because they're saying that they're going up. It's not that global liquidity is going up. They're saying, or what is being said is, hey, we have cheaper money on the Fed side, cheaper dollars. All right, which means if you have cheaper dollars because we have some rate cuts, right? Because we have some bad numbers, what happened to that extra money? Money cheaper to borrow. People that were not on a bad spot while working or something like that, they can still get cheaper money. That cheaper money is for everyone to get, right? Quote unquote, everyone, right? So what happens? Well, you see an influx of money on investments. Remember, let's remember what are people trying to achieve in here, and where was it? Here, right? Increase on stocks, right? You see a incremental increase on stocks by percentage, right? So what happens in there? Oh, let me just get rid of this and let's go back in here. So what happens when we have that incremental stocks? Well, it's cheaper to get. We see a push, right? And we might be able to see that push. And let me just get rid of this once and for all. Leave right now, right? We're able to see that push happening since yesterday to today. So this is the 4 hours. This was from, in fact, we can see it right here from the 19th. There we go. To, oh no, sorry. What was it? Yeah. the November Friday 21st, right? November 21st to right now, we start seeing, well, the how the momentum or the direction of the trades going slightly up. That doesn't mean that, right? Not at this point. Not at this point. And then, right? What's up? Obviously, Haiti, go, go, go. What's up? Welcome. And then we have, well, the Japan's rising their percentage, right? That is another smack in the economy, which means that there are certain things that's going to happen. What's going to happen? Well, historically speaking, we see a liquidity dragging here, right? So it's not, nothing is certain. Maybe, and just maybe, I'm not saying, and I don't think this. I don't. By the way, this is kind of like a plan D, right? But maybe and just maybe the dump is already factored in here, and price of Bitcoin is not gonna move. Less likely, not likely at all, right? And what the point that I'm trying to say is that with the markets, you never know until something happens and it reacts. But you can look at previous data and make a pretty hefty prediction, right? So, long story short, we have on the States a couple of things that telling us that we have that final rally, right, to the upside, not such a huge rally. But then also we have the carry trade that is lagging behind. So maybe we have that little rally and then going back down, right? I don't know if that makes sense. So that actually glues together with what are you seeing out there in the market. So let's say because there's C, Piper is answering because they see the money that's going in, but not understanding it's mostly margin leverage, right? Not real liquidity. All right, that is a pretty good point. I did not touch on that. Like when you go, for example, you do leverage trading on Bitcoin, right? You crank it up. You are putting some liquidity, right? But most of that it is leverage, so it's not real money. In most of the cases, I don't think this is speculation on my end, right? Just speculation, but I don't think that a real the brokers really stand behind on on having that liquidity they say they have when they give you that much money on leverage. They count with most of the people failing. Good morning, good morning. Hey, what's up? XYZ, how's it going? So let's take a look at if we have any other questions in here. And I think that's it. All right. I think that dump is baked in because people saw it coming and didn't want to get caught again. Ah, man, I would also would like to agree with that, and I do. In fact, I kind of like just mentioned that. But you know what? Looking at the S&P, right? I mean, talking about the S&P because as you mentioned, S&P right now, this is not what you mentioned, but S&P right now it's having, you know, like look at that, lower high, lower low, right? And breakthrough. If we're able to be above of this, or I would say, all right, it was baked in. But, and I think this was going to happen, if we do this and then a lower high, I think this is where we're going to be seeing the lagging effects, and Bitcoin might be caught on that, right? Might not be as like so deep as this one, but yeah, absolutely. And I do see that coming, right? Didn't get caught on that one. Maybe some insurance, or I don't know, but I absolutely can see that happening. All right, guys. So that is it for today. That was a great show. Again, Piper, thank you so much for giving or putting that analysis in here for me to present. Really appreciate it. And well, I think that was also something that tied up everything that we've been talking about for this last month. What is left to do right now? Well, be prepared, right? Follow the narrative. I would say this is not financial advice. Follow the narrative, but be scared, not scared, prepared about the narrative, right? Going the other way around, which is use a stop loss and prepare to head switch. All right. So to be honest, I do feel a little scared on the market, like, oh, what's it gonna do? Right? I feel a little scared, like anxious or something like that. You know, that normal feeling. But again, don't be scared, be prepared. Feeling scared is part of human nature, but take action. Don't just sit there and watch it happen, right? Take action. So that's going to be the main point, like doing something about it. So, guys, thank you so much for joining. I have to run. And as always, see you guys on Monday.
That's the rap. Chart stack, data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done.
You can't handle the truth. Emotional damage.
We'll see you at the next
They
one.
don't know what the fuck they're doing.
Morning market report out, 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 out.
Boom shakalaka.
We'll see you at the next one. Morning market report out. We'll see you at the next one.